I've done a lot of work on China just recently, and it's pretty bleak. The leadership, Xi is president and a dictator, and then you have Putin as a dictator on the other side. Not a pretty picture. And on COVID, they, I guess, just are unwilling to admit they don't have a vaccination. And so it just stays as a factor in the background. I used to want to buy an apartment in Beijing. I don't at all now. And it's very repressive. And it doesn't seem like it's going to change much. With that said, they're a very determined nation and very tough. And you might be surprised to find out, we did a survey yesterday of a group of investors, and they have China is one of the best places to invest next year, and growth going from 2 to 4. That's what I said. But
based on what?
That they're going to open up. And so one of the things that, the more you study China, there's one thing that is absolutely essential: prosperity. You have to improve the situation, because if you start to get revolts like you've seen, you get a billion people going the wrong direction, and it's not going to work.
I heard somewhere that 20% unemployment rate
yes,
among young people,
right?
College graduates.
Not good. Anyway, so she has to. He has to get the economy to move better. Not my favorite place, and it's very tough for human rights, for rights or just for anybody. It's difficult to leave the economy. The infamous Jack Ma for Alibaba. Right. He's basically been hiding out in Tokyo. But anyway, it's the one thing you can say about China is that the U.S. is a lot better. Okay.
If China is in fact slowing, which it is, then what does that do to global economic growth, and what impact is it going to have on U.S. growth?
So China has already slowed significantly. One of the mainstays we have are these company surveys, which we talked about earlier. Like our home builder survey is below 30, and we survey 21 companies that have sales in China. And that's come from 70 a year and a half ago, and now it's about 42. Now it's not 22 or 32, but it's cooled off a lot. But China has already cooled off a lot, and that is one of the reasons that oil prices have come down. And it's also put downward pressure on inflation around the world, but in particular in the U.S. So we've sort of benefited to the extent inflation is a negative, which it is. We've benefited from having China weak. And one of the things I worry about is that if China really picks up next year, that oil goes up to $120, and that creates a whole other wave. And come to think of it, Consuelo, that's exactly what the Fed's worried about. They're worried about if they stop too soon and something that they don't expect happens, like China picking up, then you could have oil pick up and inflation pick up. And they want to have that as a very low probability case before they start to cut rates. At the most, they'll slow down and maybe pause. But China mainly, for me, is a sort of socio-political issue because it's not a free society anymore.